So if you're buying a fixer-upper property, something needs a little bit of light renovation or light work, what are the options? What do you do? How do you do it? So there's a couple different ways to slice this. There are renovation loan programs. There's three kind of main reno loan programs out there. Or I guess four, but FHA conventional. So there's an FHA. It's called a 203K loan, which allows you to finance home improvements if needed. It can't be anything like cosmetic or unnecessary. Like you can't use that to finance a jacuzzi. But if a house needs like a new roof, or if it needs a new kitchen or something like that, like you can finance in those costs. Same thing goes for there's a Fannie Mae and a Freddie Mac, which are the two conventional loan uh, providers. Let's just say that give underwriting guidelines. There's two different renovation programs which are slightly different from each other, but effectively the same. Um, Basically, what all of these programs allow you to do, there's some nuances to it, but essentially what it allows you to do is it allows you to buy a house, finance in home improvements. There are some limitations. With FHA in particular, there's an upper ceiling of the cost of the work that you can do. You can't use it for ground up construction. You have to leave a certain amount of the structure remaining. And the big thing is all these repairs need to be done by a licensed contractor. So for a 2 or 3K loan, you need to hire something called a HUD consultant who is going to essentially help you put a plan together for the work that you're going to do, and you need to use HUD approved contractors. This can be a little bit arduous, let's say, for people, because finding these people, they tend to charge a little bit more money. They have this additional piece of licensure to do business on these loans. So like you're not going to get like a chuck and a truck guy to do tile for $500. Like you're going to probably pay top dollar for a HUD approved contractor to do this work. So um, it's a little bit of a process. FHA in particular, it takes a little bit longer to close. Generally, the ceiling for repairs to do what's called a 203K limited, which is a little bit easier than a 203K standard, is around 70,000. I think it's 70 or 75,000. So as long as you're doing less work than that, you can do this 2 or 3K limited, which is a little bit less of a process. But you will incur some additional costs for these HUD consultants. You're going to pay extra for the HUD approved contractors. So you have to be getting a pretty sweet deal on the house. It's not for the faint of heart, and it's not something that I personally would recommend if you just need to do like a $6,000 bathroom remodel, for example. That is not something that I personally would steer somebody to. Hey, you should do a home improvement loan. Like, no, use your own money. It's going to be a lot easier for you. Conventional is a little different. There's a little bit less, a little less hoops to jump through. But in either case, what these programs are going to do is you're going to be able to purchase a house. You'll make your down payment, and you're essentially making, let's say, your down payment is 5%, right? You are going to be making your down payment based on the cost of the home plus the cost of the renovations that you need to complete. So if you're buying a house for 350, $50,000 in renovations, just to throw a nice round number out, you're doing 5% down. Your required down payment is going to be 5% of that $400,000 balance, or $20,000. Um, how do you actually buy materials? So this all has to be done through a licensed contractor. So none of these programs are going to allow you as a homeowner to just basically have a blank check to go and go to Floor and Decor and buy tiles or anything like that. It all has to be done. There's plans submitted. One of the things that the lender is going to do is they are going to look at something called an ARV, an after renovated value, which is going to determine, after you do the work that you're planning on doing to this house, what will the value be. If you're buying it in one condition for 350, they want to make sure that the value of 400 that you're talking about, you know financing based off of, essentially, they want to make sure that that value is supported, and what you're actually doing to the house is going to add value, and that they're not going to be underwater on or they don't want to be in a position where you owe them more than the house is worth. So they do a little bit of a more thorough appraisal that looks at not only comparables for the current condition of the house, but also comparables um, for the after renovated condition of the house, to make sure that value is supported. And that's about the long and short of it, honestly. Like this, again, this is not something I would recommend for like very very small jobs, because there are some additional costs associated with it. There are some additional hoops that you have to jump through. So if it's a relatively small amount of money that you're looking at pouring into the house, like I would probably just save monthly and do it later out of your own funds. But if you're buying a place that needs like a semi gut job where you need to do bathrooms, kitchen. If there's a roof that needs to be replaced, and you can just get a killer deal on the place in its current condition. These programs will allow you to do that work, finance it if you don't have the cash to do it, and there's definitely some potential for you to make a great deal by using these programs.